Welcome back. I'm Pratap here. Today is the 9th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are available at our NeoStock YouTube channel. So to access all the training lessons at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab, you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. If you click on the link, you will get into Supply Demand Zone Price Action course playlist. The second way is you can go to the playlist, click on this playlist. Here also you have a playlist, Supply Demand Zone Price Action course. So click on this View Full Playlist, you will get into Supply Demand Zone Price Action course. Third way is in this video description, I provided the link to our Supply Demand Zone Price Action course playlist. You click the link, then only you get into all the training lessons. Now I am clicking on the View Full Playlist. See, now we are into Supply Demand Zone Price Action course. And all the training lessons are available in this playlist. And all the training lessons are placed in an order. So that is another advantage for you. So you need to start our training from lesson 1.1 that is available at the bottom of the page. Scroll down to the bottom of the page. Here starting with lesson 1.1. You please go through all these lessons one by one. But you should learn all the training lessons according to my training instructions. Then only you will get benefit. Otherwise it will be waste of your time. So I provided all the training instructions at our Telegram channel. The link to our Telegram channel link is provided in this video description. So join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. So one of the pinned messages are having all the training instructions. So learn this course according to those training instructions. Then you will become a very good independent trader in the coming months time period. Because you have to practice all the concepts according to my training instructions. So follow them. Because I have observed some of the members are not learning according to the training instructions. That will be waste of your time. So don't be hurry. Learn step by step, then definitely you will be a very good trader in the coming days. Okay, next let us get into the analysis, performance evaluation of our high liquidity zones identified in our yesterday's end of the day report. So yesterday, end of the day report, our software identified 1, 2, 3, 4, 5, 6, 7, 8 high liquidity zones. Out of these 8, today we got trades from 2 stocks. And from one stock, it is a successful trade. And another stock, it gave 2 trades, but both are stopped out. So let us discuss that. So first one is persistent. Persistent is a 75 minutes high liquidity demand zone as a rally, base rally. This is how our software identified. And this rally base rally is fine-tuned with 15 minutes time frame. Go to the 15 minutes time frame. Here we have 2 zones, 15-minute zones. One is a drop, 2 base candles and a rally candle. And another one is a rally, base, rally and follow-through candles. So both these zones are fine-tuned with 5 minutes time frame. Drop 1, 2, 3, 4, 5 base candles and rally. And here drop 1, 2, 3, 4, 5, 6, 7, 8, 9, sorry, 6, 7, 8, 9, yeah, 9 candles rally. But something is missing. Here they moved and then see lot of movement here, but after that slowly moved up. Clarity is missing here. There are higher chances this zone may violate. But the candle formation is also not really clear. And something interesting, because moved in a slowly started moving up. That's why what I did, I went to 3 minutes because clarity is missing in this zone. I went to the 3 minutes time frame, and 3 minutes you got the clear clarity. See here, lot of consolidation took place in this area. But real zone is created here, rally, base, rally. This is the actual institutional order flow. Exactly here also you see, failed ERC candle as a lagging, 2 base candles and rally follow through. So this is the area. Of course, the same thing is also 5 minutes area. And the same thing is also 3 minutes area. So no issues here. So once market is started, price has reached, gave you an entry and gave up to this gap area, probably it might have given you. What is the RR? Till the gap area. Go to 1 minute. It looks like almost 1:3 RR it gave you, right? But you can't take this trade. The reason is it is morning 9:15 1 minute candle. Looks like it gave you 1:3 RR, but you can't take this trade. Morning 9:15 candle, almost it reached the distal line. Maybe just 5 or 10 paisa difference. It reached the distal line. After that, prices moved and gave you 1:3 RR, and after that it came down. You may ask a question, can I take on a second trade? No, because prices already reached the distal line. So taking risk is a very high risky, because there are higher chances the zone will violate. That is what happened. Because it is in morning 9:15, 1 minute candle, 9:15 candle, we avoid the trade. Even it reached 1:3 RR, you can't say this is a successful trade. So this is the trade we missed it because of 9:15 candle. See, many times what happened, 9:15, prices may even come down with a gap down. At the time, risk management is very, very difficult for you. Okay, after that, at 9:31 minutes, perfectly you have to take this trade. You can't avoid. You can't have no excuses. What I mean to say, no excuses if you don't take trade. Because it is a perfectly at 9:31 candle. By the time volatility in the market is also reduced, perfectly this trade will be executed. And then it gave you 1:3 RR. After that, the zone is violated. So achieved 1:3 RR. If you are planning any 15 minutes target, probably the zone will be 15 minutes target won't be reached. At the time, if you are planning, anybody is planning 15 minutes target, you have to use the trailing stop. Instead of book your profit at 1:3, here you have to book the profit, because here you have a 1 minute zone. So here you would have booked your profit. So in this candle, you have to book your profit. Of course, your profit margin will reduce. You get the profit, but your profit margin will reduce because 1 minute. See, generally when we apply 1 minute trailing stop loss after reaching 1:3 RR. Here it reached 1:3 RR. Maybe you are aiming for more profit. Maybe you are expecting your stock may reach up to, because here there is a pro gap. Let me draw a horizontal line. So probably somewhere here you want to book your profit. So those who are expecting this much profit, you might not have booked the profit at 1:3 RR. Because sometimes what happens, prices will go a little down and again it takes support at the 1 minute zone, and then again it will started moving up. But 1 minute zone is violated. Immediately you have to exit. There is no other option for you. And book the profit. So this is for the people who did not book the profit at 1:3 RR and aiming up to this gap area, this pro gap area. Because here if you go to 15 minutes time frame, here you have a 15-minute zone, drop, base, drop. So here you have a pro gap. At pro gap area, you have to book the profit. If not here, at least here in this way. Some people keep at the open of that candle. Some people keep up to this exactly where gap is there, because still the gap area orders are consumed. Maybe some new orders may be introduced here, any 1 minute zones are there. So that's why some people keep at the open of this candle. See, whatever the technique you use, for booking the profit, it did not reach either this blue color line or maybe here it did not reach. It failed to reach 15 minutes target, 15 minutes pro gap target. So that is the reason why you have to book your profit at this 1 minute trailing stop. And those people who book the profit at 1:3, you will get the maximum profit. Okay, performance point of view, performance statistics point of view, always we calculate the maximum profit given by our software. First priority, always we give it to 15 minutes target is reached or not. If it does not reach, 15 minutes pro gap area it reached or not. Even if it does not reach, minimum 1:3 area it reached or not. These are the three we will be checking. Sometimes 1:5 also we will check. If it goes beyond 1:3, 1:5, and then let me tell you the order. First is 15 minutes target, next 15 minutes pro gap, third 1:5 RR is achieved. If not 1:5, 1:3, that is the least level reached or not. These are the four we will be calculating. So that's why the fourth one is achieved. The performance point of view, 1:3. So 1:3 RR, our software has given how much profit? I think around 4,600 or something. Yeah, 4,690 rupees it has given the profit, which is 4.5% ROA as per one futures margin cost. So this is about persistence. This is the only one successful trade we got. Actually, only two trades are executed today. One is persistence and another one is MGL. Persistence, we got successful trade. And when it comes to MGL, this is also a 75 minutes zone. This is a failed ERC as a leg-in. Software considered this failed ERC candle as a drop candle. And these three are base candles and a rally candle. In a drop base rally, the lowest of the leg-in you will consider. Okay, if you look into this zone, inside the 15 minute zone, this is the 75 minute zone. Drop, base, 3 base and rally candle. So within this, we fine-tuned with 15 minutes time frame. 15 minutes, you have drop, base, rally. This is at the proximal line of the 75 intersected. So drop, base, rally, we drawn. Again drop, base, rally, see LOTL zone is created. 15 minutes. Okay, we always focus on the first one. See, almost both are same, in the same area. And next there is one more zone, rally, base, rally, another 15 minute zone. And also one more 15 minute zone, drop, base, rally. And the fourth one is also created, that is in the dynamic zone. Today in the live market, Fourth zone is also created today. That I will show you later. First, yesterday, end of the day, these are the three we identified. And these three you need to fine tune with 5 minutes time frame. Let's go to the 5 minutes time frame. So 5 minutes, here we have a drop base rally. Okay, rally base rally is also created outside the zone. That is the LOTL zone. Just picked up the other side. So drop base. And this one is already a tested zone. But you may say here LOTL zones are created. There are higher chances this could be a high liquidity. Can we take another trade? See, those who think LOTL is 80% chances will be there. 20% it may not be high liquidity zone. Whether it is high liquidity or not, exactly our software will tell. If anybody would have taken, your trade would have been stopped out from this zone. But anyway, this zone already gave you good performance. It tested and gave you. So it is because it is a tested zone, you can't plan a trade. If anybody feel it could be a high liquidity, LOTL is there, you can plan a trade. See, generally while fine tuning, I don't look into our software while fine tuning. Based on my knowledge only, I will fine tune the zones. But yesterday, one of our members requested for this MGL supply demand zone chain. He took the subscription for supply demand zone chain. So I got curiosity. I also looked into this zone. What kind of this zone? It is a normal zone. It is not a high liquidity zone. This drop base rally is not a high liquidity. So that's why it is easily violated today. And again here also you see rally 1, 2, 3, 4 base candles and rally. And this is also tested. But here also you see it looks like a drop base rally LOTL zone. LOTL means there are higher chances it could be a high liquidity. At least 80% chances it could be high liquidity. Because many times at high liquidity zones only LOTL will be created. But remember, not 100%. Only 80% chances. Remaining 20% they could be normal zones. At the time if you take a trade, another trade, it will be stopped out. But without NeoStock help, you can't 100%, you can't get guarantee. Only we take risk, extra risk, and we plan our another trade here. If anybody taken a trade here, your trade would have been stopped out again here also. Today MGL, all fine-tuned zones are stopped out. It's very unfortunate, but it happened. Sometimes it will happen. We have to live with that. That's why risk management is very important. But when I looked into our supply demand zone chain, it is a rally base rally is a normal zone. It is not a high liquidity zone. It is just a 5 minutes normal demand zone. Okay. And third one is, this is the one. Rally base rally, medium size candle, rally base rally. This is a fresh zone. This is the area we have to plan our trade. We should not miss such kind of zones. Why? Because it is a fine-tuned zone and it is a fresh zone and also it is inside a daily, it is inside the 75 minutes high liquidity zone. Definitely we have to plan. But unfortunately this is also stopped out. We have to accept the stop out because 20% scenarios, our high liquidity zones trades might be violated. So those who have taken trade in this zone today is bad luck. See what happened today? The first morning 9:15 candle itself, this is stopped out. This is I think not 9:15 1 minute candle. Yeah, 9:15 1 minute candle itself, almost it reached the end of the day, near the digital line. So that means this zone will be easily violated, we know. So maybe some of you might have avoided by thinking who thought this is high liquidity, planning a trade, you might have avoided this because 9:15 candle itself is almost close to the digital line. When it is close to the digital line, taking another trade when prices are reaching is risky. Actually it moved, from here it moved something up, but not good enough. So easily violated later. And this is the one, see how institutions are very clever. To violate this zone, they know there is a order flow. See, they created a drop, base drop. Lot of new supply they added. and then they violated this zone. They didn't violate the zone easily. But anyway, it is a tested zone. But some of you might have thought this could be high liquidity. Maybe it is already LOTL is created. Maybe some of you might have planned the trade. Already this zone gave a successful earlier. But maybe those who thought LOTL based thought it could be a high liquidity. Software point of view, it is not a high liquidity, this 5-minute zone. But you don't have access to all these supply demand zone chain reports. Some of you who thought it could be high liquidity planned a trade, your trade would have been stopped out. But performance point of view, it already tested. This zone gave good trade previously. But our individual trades point of view, if anybody taken, it would have been stopped out. Why it is stopped out? If anybody asks the reason, there are two reasons. Reason number one, institutions might have cancelled the order flow. Reason number two, institutions decided to create a lot of supply to break this. So second one thing is happened here. They created a drop, some base just before the area itself, see a lot of movement. Now in the leg out, they added a lot of supply and then entire zone is violated. And third, this is the actual zone where we want to plan the trade. Actually, there is some movement. Prices came, but not good enough. Why not good enough? Because here already institutions created a drop base drop. From there again it came down. And once again institutions pushed here a lot of supply. See, multiple times this zone. See, again, once again it is tested. Some more movement, but it is not good enough for us. That means a lot of time this zone, 5-minute zone, holded the prices. That means the trade we have taken is not a bad zone. It is a good zone actually. But at the same time, today's supply is very strong, especially in this stock. There was a fight happened before the zone is violated. Maybe maximum it might have given you 1:1 RR, it might have given you up to here, up to this 1-minute zone. So it reached this 1-minute zone. Close to this. Okay. So that is the reason why it is stopped out. Because it is stopped out, MGL gave you 1,780 rupees loss, including stop buffers. And it has given you minus 1.5% negative ROI. Okay. And what about the next fourth one? Fourth one is a dynamic zone created today. Go to the 15 minutes time frame. Today in the live market, institutions created a zone. Drop, base, rally. This is the 15-minute zone. Many times these dynamic zones gives you good trades. Many times. I can say more than 80 to 90% they work very well. But today it's a bad luck. This is gone. Okay, drop, base, rally is created. And this one is fine-tuned with 5 minutes, but actually not 5 minutes. Why? I will tell you. So in the 5 minutes, again you see, you have a drop, 1, 2, 3. This is also a big base candle and rally. Actually, imbalance started from this candle. Again, if you draw the zone, entire 15-minute zone going to be your 5-minute zone. So risk management is beyond 2%. So to manage the risk, what you have to do? You have to use different techniques. First important technique is, if 5-minute zone is risk is very high or clarity is missing, what is the first option that should come to your mind? 3-minute zone. 3 minutes can be used as a supplement to the 5 minutes when 5 minutes clarity is missing or risk is very high. So that's why I went to the 3 minutes. So go to the 3 minutes. 3 minutes you have an excellent drop, 3 base candles and a rally candle and follow through candle. So imbalance started from this candle. Now time is over, that particular time interval. See, the imbalance continued, that is reflected in this candle. This is how you should understand imbalances, the lesson 2 concept. Always I say lesson 2 is my favorite. This is the reason. Lesson 2, always the real area we will identify. This is the area we have the actual institutional order flow. Maybe supply is very strong today. That could be one reason. All the zones in MZL is violated. But the most important thing is the marking is proper or not. That is very important. See, the moment you marked, from where it picked up the orders from here, see, after that it moved a bit up. If you go to 1 minute, you get better clarity. See, prices reached and moved up. Again moved up. There was some fight. It's not violated so easily. And finally, it is down. Generally, what happens after it tested, sharply it will move up. But today, supply is much, much stronger. Maybe institutions might have decided to break this zone. Whatever it is. But today, one point, for our terminology point of view, today supply is very strong. That's why this zone is also violated. So let's go to the 3 minutes time frame. So because of this reason, the second zone is also violated. I mean fresh zone. We have two fresh zones, fine-tuned 5-minute zones. This is a fresh one, but created today in the live market. This is the dynamic zone. And this is the old zone, fresh zone. So both are violated today. And that way, the second one also gave you a 1200 rupees, including stop buffer, and which is 1% negative ROI. These are the two stopped out. Let us assume you have taken all the 3 trades. When this trade we would have taken, this is at 10:15. When our trade is closed, the persistence trade is closed at, see, you got the trade, persistence trade. Let me go to 1 minute so that exactly we can tell. Persistence trade you got at 9:31 candle, and 1:3 you closed 9:43 candle. If not 1:3, you are aiming for more target and it is stopped out. You might have closed it at 9:46. Either you might have closed it at 9:43 with 1:3 RR, or you might have closed it at 9:46 with trailing stop. So let us assume worst case scenario 9:46 your trade is closed. After that you would have taken a trade in MGL because your money is released. Now you might have invested in MGL, and MGL first trade is at 10:16. So your money is released, you might have invested. After that, next trade is at 13:37. 13:37. So same capital you might have used in all the 3. Let us assume all 3, 1:3 exited, and here if all the 3 together, still you would have got 1,710 rupees profit you would have got. 1,710 rupees if you would have taken all these 3. See, that is the beauty of the system. 2 trades or 3 trades you took, 2 are stopped out, still you are in the profit. Because of the kind of risk management we are following. Okay, this is about successful trades, and remaining are not executed. And next, what is that? PFC. This is a 75 minutes high liquidity zone. PFC, see the beauty of this zone, I will tell you. Especially our lesson 22 concept, how powerful. Once again, you will understand in this chart. So, okay, our software identified this as a rally, 3 base candles and a drop candle with failed ERC. Not failed ERC, with a hidden body. This is a hidden body you have to add. So, it is a hidden zone. Okay, rally base drop. This is what our software identified. And this one is fine-tuned with 15. 15-minute zone is not really clear. Why? No base candle. See here. You have a rally candle. You have another rally, medium-sized candle. But here you have a 5-minute zone that you will understand once you go to 5 minutes. See here we have a drop base drop. This drop base drop is the origin for this entire 75-minute zone. And 75-minute zone picked up the orders and then entered. See, now not only that, here again rally base drop, LOTL zone is created again here. That means already this order flow is strong and some more new orders also added here. And yesterday price entered into this zone. Yesterday what time? 9:25 candle, 5 minutes candle, price entered, and after that how sharply prices came down. Till this 15 minutes target it reached yesterday. Probably here 15 minute zone will be there. Let me show you in 15 minutes. Here, see? You have a 15-minute zone. What time it reached in this candle itself? 10:45. 15 minutes candle. When you got the trade? You got the trade at 9:25 candle. When it reached the target, 10:50 candle it reached. That means in 1.5 hours it has given you huge profit. What is the concept? Lower time frame zone horizon. But unfortunately our software did not identify this. Stocks near the zone. Because yesterday candle closed here. If it is some more up, our software would have identified this. But the power of LTF zones, lower time frame zone horizon, they are powerful. That is what I want to tell you. Lesson 22 is the most important concept. It is the new concept I developed. It is not there as part of existing supply demand zone theory. But this concept is giving good profit. Such kind of zones we should not miss. Of course, they will also fail. But failure rate is very less. Maybe I can say failure rate is less than 10% or 15%. Not more than that. Failure rate. Success percent? More than 85% or 90%. We have seen so many stocks got success such kind of zones. But it is a bad luck. Software did not identify as a near to that. See, when a lower time frame zone concept is there, it need not be near to the zones. Even if it is far away from the zone and prices reach, this concept works. But HLQ zone, fine-tuned zones, stocks near the zones, we have 80% success rate. If it is now far away and reaches that, success rate will be there, maybe 60% or 65%. I'm not saying they won't work, they work, but not 80%. If you are expecting 80% success rate, fine-tuned zones, stocks near supply demand zones only you use. If it is not a fine-tuned zone, software identified 2 days back, 3 days back, still you can take a trade. Still it will work, but success rate is not 80, maybe it could be 65 or something like that. That's why when you see the old zones, you will understand. Sometimes the old analysis what we did, even though software did not identify, but prices reached from the fine-tuned area, prices will be coming down and it will be giving you good profit. You might be thinking why we missed this, why we are not taking these trades. You might be thinking like that. You can take trades, but don't climb 80% success rate. You have to say the success rate is maybe around 60 or 65%. But these LOTL zones are not like that. They have, whether software identifies or software does not identify, they have definitely more than 80% success rate. Maybe if software identifies, success rate could be 85 or 90%. If software did not identify, these zone success rate would be definitely 80% will be there. Because rarely we see such kind of zones violation. I just want to tell you how powerful this concept, and yesterday because we did not identify with the help of our software, we missed this trade. Otherwise it could have been a very good profit. Okay. So this is the one we missed yesterday. But anyway, today price did not reach. If you look into today's 75 minutes candles, see all the 5 candles are below the zone. Same is the case with Manappuram also. Manappuram is also 75 minute zone. Here we have a 5 minute zone. Here also 15 minute structure is not good. See 15-minute structure, drop, prices are just moving up, 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 up. No base candles. This is not a base candle, and sharply prices came. So that's why initially I thought this zone will violate. The moment I looked into this 5 minutes time frame, here you have excellent 5-minute zone. We have a rally, 3 base candles and a drop candle, again small follow through candle. So this is the area, it picked up the trade and prices sharply came down. Next time we can plan a trade in this area. But anyway, if you look into today's candles, the price did not enter into the zone. Today 5 candles, 1, 2, 3, 4, 5, 75 minutes candles. And this another one now, Bank of India. Bank of India is having a fine-tuned zone. Our software identified this as a rally, 3 base candles and a drop candle. And this is fine-tuned with 15 minutes time frame. See, in the 15 minutes we have drop, base, drop. And also here one more drop, base, drop is also there, but this is the origin. From this origin prices reached and prices came down. Actually this is 5 minutes. Sorry, actually I made a mistake. I'm thinking it is 5 minutes and giving you explanation. Here 15 minutes zone. You have a rally, you have a base and then drop candle. Rally, base, drop. 15 minutes zone. 15 minutes zone is having this fine-tuned zone. Go to 5 minutes, you get clarity. Here we have a rally, 2 base candles and a drop candle. Rally, base, drop. Because it is a rally candle, the highest wick you will be using. If anybody is thinking this is also base candle, if it is a drop, base, drop, in case if you feel you want to consider this as a base candle, still the zone is same. Still it is the same zone. There won't be any difference, whatever the way you think. So this is the origin. And from this origin, this 15-minute zone is created. So that's why our trade plan should be from this area. But today prices did not enter into the area. If you look into the 75 minutes candle, all the 5 candles are here. Next one is Axis Bank. This is also a 75 minutes high liquidity supply zone. See, all the 5 candles are here. Price did not enter. But here the price structure I am not happy. I am thinking this zone will be violated. Only 15 minutes zone I have drawn. Go to 15 minutes time frame. See 15 minutes time frame, you have a drop, base, drop. From here, see, this is a rally candle, this is a drop candle, and with hidden body another drop candle. All these are all pivots only. You have a rally, drop and another drop follow through. No base candles in between. If you go to 5 minutes time frame, here the structure is, I am not happy with this structure, 5 minutes. The reason is it is a drop, 1, 2, 3, 4, 5, 6, 7 base candles and a drop candle. Actually this zone has to be violated, but it did not violate. Oh, there could be other reasons. Maybe you may consider this is a drop, base. This is also, if you consider as a base, maybe here a new zone is created here. But part of the zone inside 15 is a small portion is there. But anyway, I am not fully comfortable here. Okay, when you have some doubt in your analysis, better leave that stock. So that's why I left. You may say go to 3 minutes time frame. 3 minutes also I have seen, I think. That also I am the same is the case. Everything is coming outside the zone here. Oh, the mistake, my mistake is, I got it. Here you see, 3 minute zone, fine-tuned zone is there. And it is tested here. There is a zone. Maybe I concentrated in this area, somehow ignored this area. Actually, there is a 3-minute zone, rally-based drop. We have a 3-minute zone, but that is tested in this candle. Because it is a tested zone, anyway, you can't plan the trade. Interesting how I missed this one. Okay, anyway, this is a 3 minutes is already tested one. So you can't plan a trade. Anyway, prices also did not reach. That is what I was wondering. It came here and how it came with pivot. Actually, it has to be violated. Concentrated in this area, ignored this area. Now you see 3 minutes, perfectly it is showing you. There is a rally base drop which made the difference. Maybe you can also consider, see here, maybe you can consider a trade. Drop base drop, 3-minute zone, that is the origin. But the 3 minutes origin, I won't give much priority compared to the 5 minutes. 3 minutes origin also work. Even 1 minute origins also work. But success rate point of view, I give most importance to 5 minutes. 3 minutes may work, but I can't give you this much 80% or 85% success rate. 3 minutes origins. Maybe this is the one you can consider, 3 minutes point of view. This 3 minutes origin for this entire 15 minutes zone. Oh. Same is 5 minutes. How I missed it? Lot of mistakes I did for Axis Bank. Sorry. Actually, this 15-minute zone is having a origin. Drop base drop. This is the 5 minutes. Somehow ignored it. Maybe while analyzing, I didn't hide this gap. Generally, because of the gap, what happens? All these candles become smaller. Maybe I don't know what kind of mistake I did during my analysis. This is a drop-based drop. And this drop-based drop is the origin for this 15-minute zone. So that means this is the area we can plan. Anyway, it is tested. This should be the trade plan. This origin we can plan the trade. This is a drop-based drop. From this drop-based drop, go to 15 minutes time frame. They picked up the orders. Actually, they didn't pick up also the orders. Only the base candle, first base candle is picked up the orders from this zone. But anyway, this is the area it picked up the orders. And once again, prices came up. And here you have a 3-minute zone we have seen, fine-tuned zone. From there it picked up the orders and then came down. Anyway, the 3-minute zone is a tested zone. And this 5-minute zone, except this base candle, it is yet to be tested. And this is acting as an origin at the distal line of this zone. Go to 5 minutes. So at the distal line of this 15-minute zone. So this is the area you will plan. In case of any risk management point of view, maybe fine-tune the zone. I mean, not the fine-tuning the zone, sorry. Fine-tune the entry. There is a difference between fine-tuning the zone and fine-tuning the entry, the terminology. So fine-tune your entry. Fine-tuning the entry means you are adjusting the entry in such a way it will be within your risk management. The whole English word we are simply saying fine-tuning the entry. Remember, fine-tuning the entry means you are adjusting your entry within the zone in such a way it will be within your 2% risk management level. That is what the meaning of fine-tuning the entry. Okay, we fine-tune the entry, then plan our trade. In case if the risk is beyond 2%. But anyway, today prices did not come. So that's it. And remaining to daily zones, prices did not enter into the zones. This is today's candle, and another one is Adani Sol, also the same case. It's already entered previously, but today. But what is that mistake I did? I didn't fine-tune these two zones at all. I didn't focus on these two zones. Just drawn and left it. Okay, anyway, leave it. So this is about our HLQ zone analysis. Let's all meet again in our next video. Thank you.